Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our 5 stocks with ex-dividends next week. Now, I have gone through a screening process this week. As you know, there's always hundreds of stocks with ex-dividends next week. I narrowed it down. I wanted to get some good ones this week and kind of going forward. So what I've done is I wanted to get stocks that have free cash flow. For the last 5 years, I want them to have increasing free cash flow, net income, and revenue, along with a price to earnings of below 25, a dividend yield of at least 2% or higher, and there's a few other items that I picked inside there to kind of narrow it down, and that left me with 5 stocks with ex-dividends this week. So I actually wrote it up and released it earlier this afternoon, and then shared it over to my Facebook website about 3 hours ago. 26 people have taken a look at it already, so that's really nice. And the 5 stocks we're going to be covering, I already have the ticker symbols right here. They're GILD, which is Gallade Sciences. We have FNL, Fidelity National Financial. We have EE, which is El Paso Electric Company. NWE, Northwestern Corporation. FFG, the Fbl Financial Group. So these are 5 great stocks that I picked out for this week. If any of you guys own any of these, go ahead and let me know in the comments below. How long have you owned them? When did you buy into them? If you don't mind me asking. If you had to pick one of the 5 once we cover them, go ahead and leave it in the comments below. Which one of these 5 would you pick to invest in? So let's go ahead and get into it. I already have the article written up right here. So of course, I pick 5 random stocks. We go over their dividend dates, chart them out, provide my opinion on whether the stock is currently under or overvalued, the dividend payout ratio, history, and more. Of course, I am not a financial advisor, and any opinion that I have is just my own. And let's go ahead and get into it. So the very first stock that we're going to be covering is Gallade Sciences, ticker symbol GILD. Gallade Sciences is an American biopharmaceutical company that discovers, develops, and commercializes drugs. The company concentrated primarily on antiviral drugs used in the treatment of HIV, hepatitis, and influenza. So, very nice looking company. Their ex-dividend date is the 14th of December, which is Thursday. All of these stocks here, I said 5 stocks are ordered by the ex-dividend, but all of their ex-dividends is actually next Thursday. So as long as you buy any of these 5 stocks on Wednesday of next week or prior, you will be eligible on that Thursday on the ex-dividend date. You'll be, if you bought it on Wednesday, held it until Thursday, you will be eligible for the dividend payment. So the dividend payment here is on the 28th of December. So right here below, we have it charted out. The dividend pays out 52 cents per share. The current yield is sitting at around 2.77 to around 2.84%. The current stock price is $73.34. The price to book is 3.85, and the price to sales is 3.52. Now, the Gallade stock, when charted, it shows that the current stock has a higher yield to price, which would indicate that it may be undervalued at this time. The stock is under in the industry price to earnings average. It is sitting below 60% payout ratio, and it's had dividend growth for the last year. Its price to book value is 3.85, which is higher than 3.0, where value investors would consider it a value. So the price to earnings is 8.3, which is actually very nice. The average is 15, and then the S&P average is around 25. So national average is around 15, so it's actually sitting pretty well down there. The industry, it said that it was 65.9 for the biopharmaceutical. I don't know if that's correct or not, but that's what I pulled as far as the information goes. So either way, 8.3 is very low. Dividend yield is sitting, again at 2.77 to around 2.84. That is above right now the current price. As far as where it's been going, you can see that the yield had actually gone down right around the 2.30, 2.25% yield in October when the stock shot up into the $84 range, $85 range. It has came back down quite a bit, back down into the $73 range. So this stock, it could be a good buy. It could be a good buying opportunity. It could be swinging back up. You know, it always has good ups and downs. It looks like it's pretty normal for the stock to kind of do swings. So this stock could be getting ready to go back up as far as the price goes. Who knows? It's up to your guys' best judgment. So they pay out $2.08 per share per year. Their payout ratio is very low at 24.4. They have had dividend growth for the last year, and their annual dividend growth for the last time they increased it was 10.6, which was increased back in February. They actually increased it they declared it in February of 2017, but you don't actually get that dividend until March when they pay it out for the very first time with the increase. The second stock is ticker symbol FNF, and this is Fidelity National Financial. They provide title insurance, specialty insurance, claims management, and information services within the United States. Their ex-dividend is also on the 14th of December, which is Thursday, so you do need to purchase the stock on Wednesday or prior. You would then get paid out on the 29th of December. This one is showing that it currently has a dividend. They pay out 27 cents per share per quarter. Their current stock price is $39.85. Their price to book is 2.56. Their current dividend yield is 2.51, and their price to sales is at 1.04. So the yield right now is at one of the lowest points it's been in the year. You can see that back in January, this stock was trading at around a $26 point. Now it's up to $39. So it's gone up almost 25% this year alone, which has done, really nice. So FNF stock, when charted, it does show that the current stock has a higher price to yield, which would indicate it may be overvalued at this time. The stock is under in the industry price to earnings average, below 60% payout ratio, and has had dividend growth for 5 years. Its price to book value is 2.56, which is lower than the 3.0 where value investors would consider a value. So here we can see the stock is sitting at a 17.1 price to earnings. The industry is 17.8. The dividend yield is around 2.51 to 2.71. They just declared that they're increasing their dividend by 8%. So this next dividend payout that they're going to be releasing, they're going to be bumping it up here. So you can see here that they bumped it up from around 25 cents to 27 cents. That's an 8% increase from where they were prior. And they have had dividend growth for 5 years. We've covered that. So that is FNF. That's the Fidelity National Financial. The third stock we're going to be taking a look at, El Paso Electric Company engages in the generation, transmission, and distribution of electricity primarily in Texas and southern New Mexico. So they do a lot of nuclear, natural gas, and coal power plants, as well as purchases power. They purchase power back from people doing solar panels. So the company also operates wind turbines. So they do some solar, they do some wind, they do natural gas and such. So they're a very nice, it's all national. It's within West Texas and southern New Mexico. So their ex-dividend date is on the 14th of December, which is Thursday. Their pay date is on the 29th of December. Taking a look below, we can see that they pay out 33 cents per share each quarter. Their current price to sales is 2.6. Their current stock price is $58.95. Their price to book is sitting at a 2.1, and the current dividend yield is sitting at 2.19. So when charted, it shows that the current stock has a higher price to yield, which would indicate that the stock may be overvalued at this time. The stock is over in the industry price to earnings average. It is sitting below 60% payout ratio, and it's had dividend growth for 5 years. Its price to book is at 2.10, which is lower than the 3.0 value, where value investors would consider a value. So the stock is sitting right now at a PE ratio of 25. The industry that it's in is at a 21.3 average. The dividend right now is sitting between 2.19 and 2.27. Its annualized payout, they pay out $1.34 per share. Their payout ratio is 53.4. They've had dividend growth for about 5 years, and they increased their dividend. They declared an increase back in May. They increased it in June, and that was a 9.68% increase from the year prior till the year now. So they're due for another increase in, say, June of 2018. The fourth stock we're going to be covering is ticker symbol NWE. The Northwestern Corporation. It provides electricity and natural gas to Montana, South Dakota, and Nebraska. As of December 31st, 2007, it served approximately 650,000 customers. So, a very niche specific company. So, ex-dividend date is on the 14th of December, which is Thursday. The pay date would be 29 December. So, they pay out 52 cents per share per quarter, which is pretty nice. So, every 2 shares is essentially $1. So, $120 invested, $124, $125 invested would generate you $1 per quarter or $4 in a year. The price to sales ratio is 2.34. The price to book ratio is 1.75, and the current dividend yield is 3.32%. Now it looks like it bottomed out around 3.24 as far as the yield go. The stock, let's see here, the stock looks like it's trailing down now a little bit, so this may be one to kind of wait for it to kind of bottom out or hit its support line. It does look like it goes through transitions where the price will, the price will kind of stay mild for a while and then spike up and then come back down and stay mild for a while and then spike back up. So this one could be coming back down into the $60 range possibly, but it looks like overall it has nice decent price fluctuations. And I think we covered most of this information. No, we didn't. So we didn't even read the bottom. So NWE stock, when charted, it shows that the current stock is higher price to yield, which would indicate that it is overvalued at this time. It may be overvalued at this time. The stock is over in the price to earnings average. It is above 60% payout ratio and has had dividend growth for 8 years. Its price to book value is 1.75, which is lower than 3.0, where value investors would consider a value. So the stock is sitting at a 19.4 PE. The industry that it's in is 11.52. Its dividend yield is around 3.32, 3.36. Its annualized payout is $2.10 per share. Its payout ratio is 61.9%. Its dividend growth is 8 years. And the last time that it increased its dividend was by 6% back on March of 2016 or 17, right there. So that is Northwestern Corporation. Now, the last stock that we have here is ticker symbol FFG, which is the Fbl Financial Group. They're a holding company who primarily operates in subsidiaries as Farm Bureau Life Insurance Company and Equitrust Life Insurance Company. FBL underwrites, markets, and distributes life insurance, annuities, and mutual funds to individuals and small businesses. So again, all these stocks have their ex-dividend on the 14th of December, which is next Thursday. So you do need to own each of these on Wednesday or prior and hold them until Thursday before selling them off. And then you would be eligible for the pay date either on the 28th or the 29th of December. So here we can see that their price to sales is at a 2.54. Their current stock price is at $74.85. Their current yield is at 2.32. Their current price to book value is 1.46. And they currently pay out 44 cents per share for each stock that you hold each quarter that you held them. So when charted, it shows that the current stock has a higher price to yield right now, which would indicate it may be overvalued at this time. The stock is under in the industry price to earnings average, below 60% payout ratio, and has had dividend growth for the last 4 years. Its price to book value is lower than 3.0, where value investors would consider it a value. So The current stock price to earnings is 16.6. The industry is 20.7. The dividend yield sits around 2.35 to 2.32, depending on the price fluctuation for the day. This one could be setting up to kind of stay in this position or kind of come back up. The annualized payout is $1.76 per share. Their payout ratio is 40.5. They've had dividend growth for the last 4 years, and the last time that they increased their dividend, they increased it by 4.76. But this one actually pays out a couple special pays. When I did the chart on this one, they do special pays almost every year. They've done special pays for, let's say, like the last 4 years. They did like a special pay where they paid out almost $1.80 per share for holding their stock. So they may have a low dividend yield and they may have a low annualized payout, but they reward their shareholders, their long-term shareholders, by keeping the dividend yield low for short-term investors. And then if you're a long-term investor, they'll pay you out a nice dividend payout, once in a blue moon, as long as you're holding their stock when they do that. So those are the 5 stocks that we have covered. Again, we had Gallade Sciences, GILD. We had FNF, Fidelity National Financial. EE, El Paso Electric Company. The NWE, the Northwestern Corporation. And then we had FFG, which was the Fbl Financial Group. So if I had to take a pick, so again, after reviewing each of these and taking a look at their charts, which one would you invest in, either for the short term or long term? Go ahead and let me know in the comments below, which one would you pick? Now, of all of these, I've looked at Gallade Sciences in the past, and I actually wanted to add another biopharmaceutical healthcare stock into my portfolio. I'm currently holding, as far as in that kind of sector goes, I have Pfizer and AbbVie, and they've both done really well this year. So this one, it had a bit of a dip, coming down into the looks like maybe $72, $71 range, and it may be recovering. And the current yield is kind of positioned in it. It doesn't have a too high of price to book, not too high of price to sales. This one does have some good growth, and it has a very low payout ratio where I can expect dividend growth for years to come, and they're not afraid of increasing their dividend by, say, 5 to 8% or more. So my pick for this week, if I were to pick one stock to invest some of my money in, I would probably pick Gallade Sciences. So go ahead and let me know in the comments below, which of these 5 would you pick? Do you agree with my opinion? Go ahead and let me know in the comments below. So that is it for this video. If you have watched up until this point, I do want to thank you for watching, of course. If you did like the video, hit the like button below. Please remember to subscribe if you are brand new to my channel for future financial videos. If you have any questions at all or want to say hello, please leave a comment below. If there's anything you would like to see covered, I always write it out and type it up and release it on Tuesday prior to me making a video and releasing it on Wednesday. And if you don't want to sit here and listen to me kind of go over the same information that I've typed out and presented, and you can just always check out my website. It's always going to be in the description below, or just on my Financial 101 Facebook site. So again, thanks for tuning in, and I will see you next time. Have a great day. Bye-bye.